Bear markets are terrifying, but they can accelerate people to financial stability and freedom. Because after a bear market comes a bull market. You just have to be willing to handle the volatility and have convictions in those projects for the long term. But the question for most people is, where do we start? So Harvard Fund says that it's about 289 days on average, which is about 9.6 months for the average length of a bear market. This is referring to stocks. But when we look at crypto, top analysts, top traders are thinking anywhere between 1 to 2, maybe even more years. If you've ever been through crypto, I got in at 2018 during that bear market and waited years until the lead up into 2020. What I'm going to be talking about today is crypto investing during a bear market. What I'm going to do is how to apply it to your own, and then I'm also going to go over my personal approach and what I'm going to be doing moving into this bear market. One big mistake that I made previously was spreading myself too thin through a variety of different crypto. During the 2020 bull run, I accumulated a plethora of 30 different coins, which was way too much. It was so hard to track everything, and a large part of this was I was over allocated, surprise, surprise, in highly risky assets in the crypto space. So these are micro cap, low cap crypto that are all just speculation and sentiment and hype, just how people feel about this and if they're willing to invest in this, and can take massive swings because it doesn't take much for a whale or somebody with a lot of money to swing the price. So I was over invested in a lot of those crypto. But at that time, during a bull market, everything that I invested was a winner. I felt like I couldn't lose. So what happened is I got overconfident and I began to take bigger outsized risks in this category, and I started investing more money. In a bull market, most things go up. I let these feelings of euphoria blind me into thinking that I was invincible. I even took on trading my fiance's money because I thought I was smart at that time. This was a hard lesson in risk management. And it reminds me of a quote that I heard: even dumb bulls can make money during a bull market. And I don't remember who said that, but that's something that stuck with me after this moment. I almost blew up that account entirely, and then I took a hard lesson. The worst feeling for me though is not losing my money, but the terrible feeling because I blew up all my fiance's money at that time. I didn't lose it all, but it was 80 to 90% down. This was one of the most humbling experiences I've had in my trading career. It shows how a euphoric bull market can make you feel so crazy high and overconfident. And now whenever I feel that, it is a personal sign that we might be reaching a top. The only saving grace for me at that time was my portfolio balance. 33% of my crypto portfolio was in the top coin. So I had essentially a large cap portfolio of just all of the big coins, that projects that I believed in, that I'd done a lot of research, and that I believe in the long term. Those coins would be things like Bitcoin, Ethereum, and other layer ones like Cardano and Polkadot, where I was able to invest in those early. What helped me was my portfolio allocation, since the value of these top coins didn't drop as heavily. These coins eventually were able to not only recover, but generate profits that I rolled into NFTs. If you've been following this channel, and rolling the profits into NFTs, I made good money trading. I made back that money and more, and I was able to pay back my fiance her entire initial investment. Ever since then, I've always been concerned with the balance of not only my crypto portfolio, but my entire portfolio. This is 401k, this is stocks, NFTs, crypto, and then the balance of what type of crypto that I'm in as well. So what we're going to be covering today is how I plan to protect and preserve my capital, because a big part of reaching your financial goals is learning how to not lose your money, especially when you're in high volatile assets like crypto and NFTs. And now that we're inside a bear market, I've had to reevaluate my entire portfolio allocation and then rebalance it. Portfolio allocation is just the balance of all of these different assets. Portfolio rebalancing is just changing the balance or the percents of those assets to either take on more risk or to take less risk back. You're gonna look at your current portfolio and identify the potential risks for further downside. One of the risks that I faced previously that I mentioned was I was in too many projects where it was overwhelming to maintain. As a result, I couldn't keep track of what was happening in each project and I couldn't manage my risk appropriately. And I lost a majority of that account. I couldn't keep up with the news that was coming up. I couldn't keep up with the FUD, fear, uncertainty, and doubt, all of the negative news, negative press, or when there's innovations happening, being able to exit out of short-term, high-risk assets that I was only in for the short term and I wasn't keeping for the long term. As a result, I learned a hard lesson and I lost a majority of that account. To manage that risk, what I learned is I just want to simplify my portfolio by identifying what is the best expression of my investment thesis, my framework. An investment thesis is just a fancy way to say why you believe in this investment that will make you money. This can apply to a single company, an industry, an asset class. So my goal was to simplify the management to just core trades that represent my overbelief of where the market is going and my highest conviction companies and blockchains that represent that inside my crypto portfolio. So let's go over my personal strategy for rebalancing my portfolio in a crypto bear market so you can come up with your own. And then I'll also briefly talk about what I'm doing with some of the traditional parts of my portfolio as well. First thing you want to do is establish your beliefs about the overall market and the different sectors in your portfolio. If you believe in crypto long-term, like I do, my underlying investment thesis or simply the reasons why I believe in crypto long-term haven't changed. Underlying blockchain technology, problems it solves, unique innovations in crypto, the network adoption that's happening, those haven't changed. So here was me revisiting and tightening up my general investment thesis for crypto. Here is my investment thesis. Cryptocurrency and the underlying blockchain technology has a massive growing network effect. This is the fastest adopted technology since the invention of the internet. At the highest level, it solves problems that our legacy systems are failing at. It continues to generate unique innovations and use cases that are the best solutions for those market needs. Since we are early before mainstream adoption, there is massive long-term opportunity within the crypto space, but like the dot-com bubble, a majority of projects, new businesses are going to fail. So there's a lot of risks to account for. At that time, there was a lot of short-term money that was made in the dot-com bubble, but only if you managed your risk carefully. And even when the dot-com bubble popped, it didn't mean the internet technology was a passing fad. No, the massive inherent value of the internet gave society and had a booming industry because of it. So I believe that cryptocurrency and the blockchain technology behind it will have and continue to have and disrupt existing markets now and into the future. So that's my investment thesis. It's a little big, complicated, but I wanted to write out something in a paragraph. You can make yours simpler just so it reaffirms what the main beliefs that I have inside crypto. This is not all the reasons. These are just some of the big reasons and just a good reminder for myself. So you want to create your investment thesis by doing your own research and analysis so you have convictions inside your investments, especially during a bear. Your investment thesis can be simple, but it needs to be adequately supported so you know what you're investing in, for how long, and what the risks are, and how to protect against them, and when you're exiting. So do a lot of research, understand the ins and the outs of what you're investing in, read Medium articles, watch various sources on YouTube, read crypto white papers, listen to podcasts, and follow smart people on Twitter. Go to the library, read books on investing and the technology, consume as much information to make your own educated opinions. Because if you only rely on outside sources to make your decisions, you'll always be behind and you'll always miss opportunities or potentially fail to protect your money against risk. Everybody has different perspectives. We have nuances to why we're investing and our unique circumstances in life. As much as I want to, I can't give you just a strict catered investment plan of this is what it's going to be, because it will differ based on your own unique preferences. So what I want to do with this channel is to be able to give the fundamentals so that you can create, adapt, and change and make your own financial decisions, because that's what's important. Otherwise, you'll be behind in the market and you won't make as much money. After you create your investment thesis, look at the different sectors, projects, companies, crypto that you believe in the long term and that have potential. What are the top investment or investments that have a higher chance of surviving this bear market? Usually it's going to be top performers of that category and what the market believes are blue chips, large caps, or safer investments. So you want to think of risk as a curve, where the left side is going to be more conservative and then the right side is going to be the riskiest. The more that you move to the right, the higher the potential returns. The further you move to the left, the lower the risk, but the lower the potential returns. A common investment strategy as the bull market is moving is you start moving from the left side to the right side to maximize potential profits. During this last bull run, I rolled some of my crypto profits to trading NFTs. This was to maximize my gain since the safer assets were not growing as fast and do not have the same growth potential. So I wanted exposure to higher risk, higher reward assets because we were inside a bull market. But in a bull, most investments tend to grow over time, with higher risk having the highest potential. It's risky though, because in a correction, which happens all the time, these higher risk investments are dramatically more affected. And when we have the risk of going into a bear market, these crash even harder. So inside a bear market, you want to think of this and see it as a risk off environment. You'll hear all of these different people talking about risk off. But what is risk on versus risk off? Simply put, risk on is investors taking risks. Risk off is our investors not taking risks. Risk is tied to how investors feel about the market, which is known as sentiment. So generally, bull markets are risk on, bear markets are risk off, and risk on, investors just feel more comfortable buying riskier assets like NFTs. Risk off is where investors sell riskier assets and buy into safer assets. So depending on the crypto investor, risk off could mean selling crypto or NFTs into Bitcoin or Ethereum or into stablecoin / CAS or a mix of this. There are indicators during a bull market that traders use to start de-risking or taking profits within their portfolio. I'll cover these in future videos, so subscribe to the channel if you haven't yet, but that is when things get a little bit more complicated. For the most part, most people are going to be better just holding and adding to their position and just holding for the long term and just cashing out in the far future. Overall average stats and statistics for most people, it is better to just hold and be an investor, because most people suck at trading and will lose money trading. At the beginning of the last bull market, I was always afraid, because timing the top is extremely hard. And as you know, I've lost a significant portion of my portfolio from holding too long in these high risk assets. Crypto is already high risk or considered high risk. Going towards the far right side of the curve, this was extremely high risk, and that's what I got over invested in and wrecked my portfolio. It's, in my opinion, it's much easier to buy in a bear market because we are much closer to the bottom than we are to the previous all-time highs. Yes, it can go down significantly, but the risk is no longer as high if you bought in at the top of the bull market and then it crashed to the bear market. Because of timing the bottom and getting in and not knowing when to get in, most people sell into cash, but they never come back in because they don't have a strategy. So one of the ways to protect against that risk is investors will start to dollar cost average over a period of time when they see a dramatic crash or correction, instead of trying to time the market and lump sum their buys. So once they see that it's at a discount, it's 2x, 3x, 4x, 5x from its original price. These investors will start to dollar cost average, which is just consistently buy at a time frame regardless of the price into these investments. These need to be things that must survive the bear market. They need to be able to thrive in the next bull market. So the fundamentals, the community, the team, and plus much more need to be solid. Make sure you do your research. Well, now that we've established your investment thesis, you're going to rebalance your portfolio to adjust how much risk you want. Since we're on a risk-off environment, you want to look and sell to rebalance into less risky assets, if that's what you want to do. Some people will still take on high risk, so this is just going to be according to how you feel about the long-term nature of those different assets. So I can't tell you what to do, but I'm just gonna give you advice of what other people are doing and what I'm doing. I'm not a financial advisor. This is not financial advice. This is just my financial opinion and what I've learned through research. So the question is, what investments should you cut off and sell? For most people, you shouldn't sell. For most people, and especially right now. Unfortunately, when a bear market happens, it might already be too late to sell off your investments because you're selling the bottom. Our human psychology makes us buy the top because we see that it's going up and we can only think that it's going up. And then we sell the bottom because we panic and everyone stampedes and fear gets everybody to sell out. For most people, you don't want to sell at these points and you want to take a longer term outlook. 2 years, 5 years, worst case, 10 years, a decade, they have the potential to recover. But if they are strong investments, they've survived crashes before in bear markets, they have strong fundamentals, great founders, team, solid track record of execution, is the market leader or top performer for their category, has a strong cult-like community, and fulfills a major need in the market, they have a higher chance of surviving. Also, large capitalization and large trading volume, which is just fancy ways of just saying it's worth a lot of money, and there's consistently a lot of people that are trading it daily. In most of those cases, for most people, you're not gonna want to cut it and sell. But there are some cases where you should cut the losses. And this is something that I learned previously, and this is something that I learned trading high risk assets. We're already in crypto, it's high risk, and then you move to the far right, it's even higher risk. So these are extremely short term. Here are some of the cases where you want to cut the losses. First is tax loss harvesting. You want to lock in the losses before the end of the tax year so that you owe less taxes. Consult your accountant, consult your tax advisor for more information because I am not a tax advisor. This is not tax advice. The other thing is cut high risk projects that you believe will never recover. Ask yourself, is this the highest or close to the highest that it will be? Or you want to cut losses to make better use of the money instead of holding it and having it locked up. A lot of the best and top traders that I know inside the market, these are people with $1 million accounts. These are people who show up on Etherscan and all of these different wallet trackers where people follow them into all of these projects. What they do is they always talk about number one rule is to have liquid. And what that means, liquid is just money. How fast can you change an asset into cash? So in this case, it would be Ethereum or stable coins. They want to have that to be able to trade more because they believe that they locking it up for 2 months, 1 month, even for a week for some of them, because there's upcoming projects, they can take that loss and recover that loss because they'll be trading in other NFT projects or even trading crypto because they're good at what they do. They're good at NFTs or they're good at DeFi, they're good at trading. That's not gonna be 99% of you, but for the select few in the time frame that I'm gonna have it locked up, can I put this money to better use? So after you've identified what assets you want to sell and then rebalance the funds into safe assets, some of you are not going to sell anything. And the way that you rebalance is just allocating new income into those assets till you get the percentages that you want inside your portfolio. So you want to come up with a portfolio allocation of less risky, safe assets or even risky assets, but having reducing your risks according to what your investment thesis is. Most people are going to rebalance into safer assets like Bitcoin, Ethereum, and then maybe have a smaller percentage dedicated to higher risk assets that they still believe in, and then have a percentage in stable coins and in cash just to take advantage of the market if there happens to be another buying opportunity that presents itself. And then you'll be putting more money into those assets and buying more of those assets until the portfolio value gets to the perfect percentages that you want. And then you'll just evenly allocate your income across your whole portfolio. Part of this is going to be freeing up more money so you can accumulate at these price ranges as well, so you can dollar cost average. This is one of the things that a lot of people are going to be doing right now, is to be taking advantage of these prices, and they're dollar cost averaging because it's hard to time the exact bottom. So then they're just going to be dollar cost averaging at these low prices in projects that they believe in. So to free up more money, what you want to be able to do is redo your budget and cut expenses. Free up more capital to dollar cost average as much as you can. This needs to be money you do not need. Do not be using your rent money. Don't be taking out loans, your money you need for food, or anything that you need to pay for upcoming big expenses. Make sure these are not expenses that you need. So you want to be consistently invested during the bear market to accumulate at these low price ranges. You'll be choosing investments that best represent your investment thesis. And so you've heard my investment thesis. Basically, what I want to do is reduce my risk within my investment thesis. So I'm going to be accumulating safer assets. But at the same time, I want some exposure into riskier crypto that I believe has long-term staying power and potential, just to maximize some upside. But with that, I do consider that those portions of my portfolio may not recover, but I'm taking the risk because it's already significantly down, but I believe in the project and the team behind it. So right now, I'm going to break down my ongoing accumulation. Generally, the higher the market cap, the safer, but as we are seeing, even high market cap crypto can fail, as we saw with Luna. So here, these represent all of the projects I have long-term convictions in. Within the large cap category, which is just crypto over 10 billion market cap, I chose ETH, I chose Bitcoin. These are the best expressions for a layer 1 blockchain that I have, or blockchains that I have long-term conviction in. This also gives me flexibility to use ETH for trading NFTs in the future bull run when NFTs run hot again. This represents about 50% of the funds that I'm freeing up to invest in cryptocurrency consistently. It's going to ETH and BTC equally. BTC and ETH are the #1 and #2 cryptocurrencies, so I feel good about holding these long term, even if the market continues to crash. I used to trade BTC during 2018, during those bear markets, and I accumulated some ETH during that time as well. So I've been through holding, and I know what it's going to be like to see these massive crashes. So I'm okay holding this, and I believe in them long term. Medium cap, these are cryptos that are anywhere from 10 billion to 1 billion. I'm going to be accumulating 8. This is the best expression of my trade for exposures into NFTs, Metaverse, and Yuga Labs. Yuga Labs is the #1 NFT company. They own Bored Ape, they own CryptoPunks. #1 and #2 NFT projects. This also gives me flexibility for having ApeCoin for future utility inside the Yuga Labs metaverse because I own Other Side, which is the land inside their metaverse. I believe in this company based on the project, the community, their execution, and the cultural relevance that NFTs, especially Bored Apes, have been showing. I want exposure into that. So 25% of my funds, my crypto funds, will be allocated into ApeCoin. The current trading price at the time of this video was 4.75. Its all-time high was 2363. If we get back to all-time highs, this is more than a 5x. And I believe Yuga will have another event that's going to require ApeCoin. So I can either plan to sell ApeCoin leading into the pump or use it for that event and within their ecosystem. So I like the flexibility that gives me. Now going into small caps, higher risk, but higher potential. I'm going to be investing in Gala Games. This is the best expression of my gaming crypto trade. This is for exposure into crypto and NFT gaming because of the diverse portfolio of games that they have, which reduces the risks of them relying on the success of one game. They are one of the top crypto gaming projects in terms of traffic and active users. And again, this gives me flexibility of having Gala to use for buying and trading NFTs within the Gala ecosystem, so that when the bull market comes back, I have the flexibility to roll some of my Gala profits and use Gala to trade NFTs on their platform. The current price at the time of recording is about 5 cents. The all-time high was about 82 cents. If Gala can regain previous high, that is a potential 16x. That might not happen. There's projects that I've seen go to zero, but I'm willing to take the risk because I believe in Gala. I like the ecosystem, and I played a few of their games and I like what they're doing over there. These are the projects that I'm accumulating. That said, Ape, Gala might not survive the bear market, but that's a risk I'm willing to take because I've done the research within those projects. So let's factor in some other investments that I'm making. So to balance potential unforeseen risks in crypto, I am not going to stop investing in my 401k or in healthcare. My 401k is long-term money that I can't touch. That is also free money because of my employer match. So I do not want to touch this. And within my 401k, they're all low cost index funds. My expense ratio and the management fees within those funds, extremely low because they're index funds. So the majority of that is going to be in stocks, both in domestic and international. So in a future video, I'll go over my 401k allocation and how I balance that. Basically, a friend who used to be an analyst at one of the top investment firms, he just sat me down and gave me this portfolio allocation. Basically what it does, it balances out what happens in the US, what happens internationally, emerging markets, bonds, real estate, treasury inflated funds, and just makes a mix. So you can get exposure to all of these different markets. And then if something happens to rise more and one falls, when you rebalance, then you would sell, or you would just put more money into the ones that are increasing, and then you would rebalance your portfolio so that it gives a good overall exposure to the market. I'm not touching that because I want to still have the exposure and long-term exposure not affect my retirement. So that allocation stays the same because I'd rather have a peace of mind of having my 401k just in case there is something that I have no idea about in crypto, that I still have my retirement intact. And then the other one is, why healthcare? It's because I max out my employee purchase plan. This is basically, I get a discount on our company stock, which is within the Fortune 10. And then I keep this for two reasons. Healthcare stocks tend to be safer during recessions, and it looks like we're going to be heading into a recession, or there's a high possibility that it's going to be happening. My company gives a 10% discount. It's a leading healthcare company, so it's like free money because they keep on growing. And I just want to diversify my portfolio to offset my crypto risk and just have exposure into healthcare. Even though it's slower, I just want to have a little bit of that safety net and peace of mind, and I get it at a 10% discount. Yes, it's risky because it's one stock, but I seriously believe in my company a lot. If we account for my 401k and stock purchase plan, here is how much of my monthly investment income I plan to invest consistently during this bear market. Out of my monthly income, discretionary income that goes to investing, it's going to be 10% in BTC, 10% in ETH, 10% in Ape, 10% in Gala, with 30% going into my 401k, and then 30% going to healthcare through my employee stock purchase plan. One thing that might change is if we start going into lower BTC and ETH prices, I'll probably rebalance less into healthcare and more into BTC and ETH specifically to take advantage of these prices. But that's a big if. That depends on what levels we reach. And if we reach some lower levels and there's extreme fear and I look at the chart and look, okay, I'll be investing more at these levels. I'll do more videos talking about the different levels I'll be looking at and just giving more market updates in terms of BTC and ETH and also NFTs. I'll probably rebalance and take that cash and put it more into BTC and ETH because I want to take advantage of those prices. So this is my bear market investment strategy. And in the next video, I'm going to cover my bear market trading strategy, which includes crypto and NFTs. So if you like this video, subscribe so you don't miss it. I'd love to hear what you think of my strategy and your own strategies are for this bear market, so leave that below. And then as always, take care, talk soon, and I'll see you in the next video.